Maverick traders? Welcome out to your Maverick Currency Midweek for May 18th, 2022. The year is flying by and we're having a lot of fun. Volatility always creates opportunity when you're trading in the financial markets. So 2022 has been great on that front, and there's certainly been some themes in currency land that we've highlighted. One of those that I've been highlighting in these midweeks each week is basically this flurry finish for the US dollar. We'll talk more about that because we got it. And now there's some opportunity not only to play it for kind of that flurry finish up, but now the reversal. I know in speaking to a few of you that has been done. So let's get to it. As always, a quick reminder to make sure you follow your trading plan. Let's start with a market review. As we've talked about, markets are in this downtrend, and overall, we've gone from this quantitative easing to quantitative tightening dynamic. So there's been this shift that's taken place, QE to QT, and it takes time and it takes process. And time is really of the essence here in that you've got to work off a lot of the excess liquidity. You've got to do things that'll bring down inflation, and it's not a quick fix. It's not like the Fed can just snap their fingers and everything's fixed. It's not like they can raise rates once or twice and everything's solved. No, that's not how it works. These things take time, and there will be some pain in between now and then. However, I've been emphasizing that it is my thesis that inflation's already peaked. When we saw it up there at its 8.5% annualized inflation, you're starting to get some data this week about Walmart and Target and huge misses on earnings and massive builds in inventory. Well, what are they going to have to do with all that inventory? They're going to have to mark down prices. That's anti-inflationary, right? That's deflationary, where prices are going lower even as demand kind of slows down and you have to keep discounting prices. So, and it's not just the retailers. There's signs that we're basically backing off of these higher inflation levels. But again, that doesn't mean it's a solution. If you go from 8.5 to 6% inflation, well, that's still way, that's 3 times larger than their targeted inflation at 2% annually. So the Fed came out, Powell said this week that, look, we're going to keep raising rates until we see inflation back towards our target at 2%. Now, US dollar, we talked about this for the past few weeks, this major resistance zone. I've had the thesis, and this is how markets usually work, that what? We talked about this as far back as the Fed meeting. You've come up to this major resistance. This is the third time. And I said, the way markets work, you should blow through it and it'll be kind of a fake out and then sink right back in. And there should be a good sized downward move that follows. But the trade was play the US dollar to the upside until you see that kind of spiky finish. And you get everyone kind of sucked up into it, saying, "Oh, the dollar, here we go, it's breaking out," and so on. And if it gives you that false reversal, boy, there's opportunity. We say from false moves come fast moves, right? So false breakout up. Where should the US dollar go from here? The dollar should really start to fall back in a meaningful way over the next couple of weeks. I've got it very much in my crosshairs as an opportunity to the downside. If you're looking at things to play against it on the upside, well, energy, CAD, those are still very, very strong areas of the markets. And, a few weeks ago, I talked about, look, oil looks much better. I've had this in there for the past few weeks, looks much better than gold. It's just going to be better. Gold is diverging this way and oil keeps going this way. Why does that make a ton of sense? Well, at the end of the day, things come down to supply and demand, right? And there's a process of supply and demand, again, many years that these things build. When oil collapsed and went negative, you literally had companies in the oil patch going under. You had them shutting down production. They're not going to keep pumping oil out of the ground and selling it for nothing. They're not going to pull it out of the ground when it costs them, $45 per barrel to pull it out of the ground. They're not going to do that if they can only sell it for 20. That's a losing proposition. So literally, as prices collapsed, you saw oil wells and all these things being shut down. Well, fast forward to today, you just don't have as much production. Now they could increase it, they could build out pipelines, they could do a lot of things, but that's not how kind of government works. Instead, government's complaining about the prices going up, and they're even saying we might cap prices and we might say you can't make beyond X amount, which will do what? Well, it'll cause more companies to shut down production, it'll make oil more scarce, and it'll make the prices go even higher. I'm not sure why they don't understand that. That boggles my mind, but they don't. So here's the point: there's less oil in the markets, period. There's less oil that can be. Now, we didn't know a war was coming this year, but the reality is just here in the US, as an example, there's just going to be less capacity, and they've got to, it takes time to open up a new oil well and get it back up and running and start the production and borrow. You have to borrow the rigs and pay interest on that to Schlumberger and to Baker Hughes and to Halliburton and these other oil service companies. And it's a big, long process. You can't, again, just snap your fingers and have more oil. So, oil energy's had a little bit more stickiness to it because it's a supply and demand situation more than anything else. So, oil, if you're looking at it from a commodities play, I've liked CAD the last few weeks. I'm going to stick with that. It's just where there's a pocket of strength. And now, are there other excesses in the Canadian economy? Do they have a housing potential bubble? Do they have some other issues? It's not just guaranteed to be higher because energy's strong. There's some other problems within the CAD economy, but that's one that just kind of comes to mind that fundamentally and technically has been trading a little bit better. Now, I mentioned this US dollar thesis and this concept. Let's go take a look at a couple of things here, including the US dollar and other currencies. So this can be a little bit of a precursor, I think, to more to come. Look at the US dollar so far this week, the weakest currency by far. Everything else relatively flat. Well, Swiss franc, I guess, is up. Everything else is flat. US dollar down, Swiss franc is up. The markets are actually up from their lows. And I think this makes a ton of sense. The dollar kind of plunged to its lows when, or pardon me, stock markets plunged to their lows when US dollar was kind of making that fake breakout. I think these move in opposite directions. And that's a weird thing to say when the market's down 3%. But I would be much more of a buyer of stocks here because I think we're in a corrective phase back up. There are those, I mean, there's a lot of pessimism out there. If you turn on CNBC, they're going to tell you how all hell's going to break loose here in the next couple of days and so on. Maybe they'll be right, but they'll write about once out of 10 selling this type of fear and kind of, fear mongering a little bit. Who knows? Maybe we do break to new lows immediately, but that's not how I see it. The way I see it is we're actually doing what we should do. And even with today's big sell-off, we're still well above that low. And I think we'll stabilize in here within the next couple of days and continue to make a little push to the upside. So you'll grade my work, right? We'll come back next week and say, how did Corey do? Maybe I fall flat on my face. But when the market's rallying here, it should be US dollar on the other side of that, continuing to come off of those highs. As we look at the week's performance, crypto's it's a bloodbath. And I don't know what stops this other than just basically exhaustion. Exhaustion will kind of stop the decline, meaning that anyone that's willing to sell has sold, and that's just perhaps the nature of what's going to transpire. Again, there's not a lot of backstop for these declines that we've been seeing in the marketplace. I mean, the reality is that crypto's just in a really bad spot. It's not what a lot of people want it to be. It's not this great inflation hedge where if inflation runs hot, it's going to boom. No, it's just a risk asset. It's a risk asset like anything else. It's a problematic risk asset because it's not backed by fundamentals of cash flows and earnings and revenues. It's not like, other assets. If I buy farmland, well, corn gets consumed. So I get to keep planting and producing more corn, and then they consume that, and then I produce more and I get to sell it. And it has action involved to it. It has production. When you buy Bitcoin, it doesn't produce something that you get to keep selling and cash flowing and so forth. So it's like gold in a way. It's like the US dollar in a way. It's an asset that you can hold, and hopefully it gains value versus some other things and so forth, and maybe I can utilize it but it's not a productive asset. It's not creating something. Apple gets to keep selling phones, and people use those phones and they break those phones and they buy more phones, and you get to keep selling them. A farmer gets to keep selling more and more corn that gets consumed, or wheat, or what have you. Bitcoin, it's not a cash flowing asset. And by the way, the things that they tried to create off of this to make it a creative, producing asset, the Terras of the world, well, those weren't productive assets. Those were Ponzi schemes, for lack of a better term. What did they try to do with that? Well, they basically created this box and they said, hey, put money in the box and we'll give you a little token. And these tokens you might be able to sell to other people for some money. And so some big names put money into the box, and they said, hey, look, this big name put 20 million in, and they got these tokens. You might want to do the same. And so as other people would put money in, well, the early investors could pull money out, and maybe you'd convince some people to come in and buy your little token, and you'd make some money that way as well. But you weren't producing anything. There wasn't consumption and production. You were just making stuff up. It's like little characters, so to speak. You're just creating something, and if people are willing to buy it, great. But if people stop buying it and then people want their money out, there's no assets there, right? There's no real anything. So it implodes upon itself, because perhaps those little tokens that you invented are not really worth anything, and perhaps the early investors cash out with the new investors' money, but the new investors are left holding the bag. And that some of those products are a real problem in the marketplace, and there are unfortunately more of those things coming through the pipelines in the crypto space. We're not done yet. So as we look at this week, oil, crypto, markets are down, gold up a little bit on the week. Let's take a closer look at these things. So my thesis is we put in an important low. This low, in trading, a lot of times, people ask, like, can you draw up a scenario where this or that or whatever? And I always say, look, it's easier to know what is going to happen than when it's going to happen. The timing on things is the hardest part. This is the most difficult aspect of the market, to get the timing. But to kind of know and to see it playing out, it wasn't like I came into 2022 quite negative. It didn't take a ton of brain power to kind of figure out, okay, what's transpiring in the marketplace? What are we going to have to prepare for? Well, we're going from these easy monetary policy, printing money. We're going the opposite. The Fed has already told us they're going to wind down their bond purchasing programs. It's basically retiring capital. Every time a bond matures, the money gets paid back to the Fed, and the Fed retires that money. They used to do what was called QE. It was basically a sterilized QE, where they weren't printing new money, but they would, every time a bond would mature, they'd roll it into a new one. So they had this money constantly going, propping up the market, keeping rates down, and so on. And we knew that they were going to unwind that. We knew that they're going to quantitative tightening. We knew that inflation was an issue. We knew that, the economy, that stocks were priced in their upper percentiles compared to history, and that they were priced quite expensive. We knew that there were a lot of bad things. What we didn't know was a war was coming. That was an unknown, right? And that was a bad unknown. It was an unknown that said, okay, well, this wasn't on anyone's, you know, calendar. So what do we do with that? Well, it's bad. It's going to create more problems. It's going to create more inflation. It's going to create less supply of oil, which, some of these products that are a little bit more scarce because of the problems with them that have already been in place. And it was just another negative that hit the market. So the market hasn't had a deal of good luck either in 2022, but knowing that some of these things were coming is a lot easier than knowing exactly when. Did we know that the market would just crack right here and then bounce back? The timing of everything is a little bit more difficult, right? And that's where traders have to learn to feel the markets out and kind of understand, okay, where does risk to reward favor me and where does it not favor me? I mean, the idea that I'm going to aggressively sell and short the market down here after it's already been cascading lower like this, and then it's getting blasted with bad news, and yet it turns positive on the day. No, thank you. I'll take profits on bearish trades. I will not short more things. A rally was likely. One of the things that was happening right there was that Apple, the biggest market cap stock in the biggest company in the S&P 500 by a wide margin, actually broke violently down the prior 2 days. And again, I wasn't watching for that signal, but I knew what that meant. Hey, this is great. It's like you tipped over dominoes and Apple's the last one in the line. Once that topples over, it's kind of, hey, that now we can swing back to the upside. And I don't think it's done. Again, I'll be on record. Look, I'm wrong if this market just plunges right here. I'm right, though, if we stop going down today and into tomorrow, and then we start to bounce back and we get this other little rally here. I think we're in a corrective phase where it takes some time. Look, we just sprinted, we just ran a race. Give me a break. We just sprinted to the downside. We need a breather. That's perfectly fine. Spend some time here, take a little breather, and then we can restart to the downside in the future. That's how I see it. I think I'll be right. I mean, I wouldn't say it otherwise, right? I don't get everything right, but I think I will be. Here's the US dollar, and you can see the breakout to the upside that we've talked about. This is huge key chart long term. This is the dollar index, what they call the Dixie, right? We hit here and fell back, major resistance in 2017. We retested it on COVID. It was just kind of a flash up there, and then we fell off, and now we're back to that level. And what have we been saying? Here's how the markets normally work. You should break through and really suck a lot of people in. A la how let in terms of the markets, kind of like how gold did it. Gold, when it went up and broke its 2011 peak, kind of flushed people out, right? It had this spike above where everyone said, hey, we're breaking out, and it's kind of a false breakout. Look where the dollar index is now, right back below this level, kind of plunging back below. That's a false move. Where do we go from here? I think there's pretty good downside in the next few weeks. My expectation would be that the dollar should trend lower here for the next few weeks, right? And get some serious give back. So I definitely have US dollar on my short thesis. Now it has to have trend, it has to have momentum, it has to have some setups for me to take action on that, but it is on my bearish list. That's what I see. Okay. Now, let's take a look. Like we said, it's already happening. US dollar's kind of cratering. So some of you are looking at that. We don't need to talk about, again, the disaster that is crypto. We know they're all down massively. All right. So as we look at this week, we're in this downward trend, but I have to kind of go this way with the outlook. We talked about it in our stock and option side, that the long-term trend is down, but the short term, it depends on your time horizon. The short term is green. Now, we had a nice rebound yesterday. We've given that back, but I still think there's a little bit more of a chug here to the upside. If if I were to throw out a number, not that I can do that perfectly, but I would kind of say in here at about 415 on the S&P, something like that. If you were using international markets, kind of come up here in VT towards 94, pretty good size move. Or if we look over here at Bitcoin, we'll take a closer look at that chart, kind of look at the cryptos themselves. The only thing that can kind of save crypto, I feel like, is probably an exhaustion point. I don't know that there's much else that can happen here other than a big, what we call a capitulation, kind of people throwing in the towel. So as you look at the international markets, again, I think we'll rebound here. It's an ugly day today, and it's probably gonna finish ugly, and then tomorrow we'll trade a little lower, and that should be about the bottom, and we'll come up off of that. That would be my expectation. I always say that trading is about painting a picture and seeing if the picture that the market's painting, it won't always be identical, of course, but is the picture basically playing out that you envisioned, right? I've got to paint a picture forward of what I expect to see and see how the market's reacting. And then if it's reacting the right way, now I have confidence to take an action and to make money off of that. And so I expect stabilization as soon as tomorrow and kind of a rebound into Friday. Here, as you look at the crypto markets, we had a massive plunge on huge volume. We kind of consolidated and rolling over again. This is one where I would anticipate again that you probably, in the case of crypto, are going to take out that low. Expect another, push to the downside. We should pierce that low, and then we can talk about possible bounce back, quick volatile trades on the upside. But it is a broken market. All of those crypto charts are broken. I mean, you pretty much have to keep just bearish. It's bearish trading, like we said, for multiple weeks. On the calendar, you can see the rest of this week, we've got Aussie employment out tonight, Philly Fed tomorrow morning. You've got existing home sales. Now, I anticipate that home sales data, new home sales, all these things, could be a real problem. You have two pretty bad things happening in the markets. One is that prices are still sky high, so it costs a lot. And two, mortgage cost, interest rates have skyrocketed. So that costs a lot. So home affordability, has really fallen because not only do you have prices at crazy highs, you also have the cost to borrow money for a 30-year mortgage at crazy high levels, well, when I say crazy high, they're not high by historical metrics, but they're about double what they were last year. So when you extrapolate that out, you think about somebody that might have taken out a mortgage and it was going to cost them $1,500 or something. 1 year later, now it's going to be $2,500 a month or whatnot. Coming up with almost double the mortgage payment. Well, that's a tough situation. So housing is in a tough spot. I don't know any other way to put it other than to say that that's a pretty tough spot to be in the housing front. So let's take a look at a few different charts. Now, as we always say, if you have anything you want to look at, fire away. I'm going to pull up a few different names and we'll look at some things here together. So let me pull this up. Let's go to our trend and velocity chart and we'll take a look at a few of these. So I mentioned, for this week, crypto space is in a little bit of a consolidation, but I think rolling over. So regardless of which one you pull up, the chart's pretty much the same. We're above the parabolic SAR, but I think that's going to flip to negative here very shortly, and you'll start to see these up above, and you should see the price action really start to kind of come down from that point. So Solana, I mean, it doesn't matter. Ethereum, Bitcoin Cash, I mean, the charts are pretty much identical. There's not a whole lot of difference as we click on these. Some of them a little worse than the other. So if you want to pick and choose a little, fine. But for the most part, I think we're seeing that flip, that reversal. Now, what you'd watch for, you might say, well, how low do we go? What should happen is you pierce this low. So look at the candle over here that was the low in crypto, and you should temporarily pierce that as kind of a profit taking. I mean, in the case of Litecoin, which happens to be this one, for me, I would be taking profits on that pierce. That's where you'd see, stop losses get triggered, a lot of different things where people are trying to bet on the bottom. The bottom's probably not in. Good place to take profits as they're getting flushed out of their trades. And you should see kind of a sharp drop below that low, which is a profit taking opportunity in my view. As we look at currency baskets, let's go through the US dollar a little bit here because I'm sitting here giving a bearish thesis, and I like the bearish thesis, I have to say. So how do I think this trades? Well, we could flip to a couple of different time frames. Here's the daily, and it looks like we're just in a pullback, but I don't think so. I think it's a little bit more than that. I think we'll, as we bounce, we'll roll over again, and you'll start to establish lower highs, lower lows, lower highs, lower lows, and we're going to spend, the coming weeks in a downward phase. The most instructive chart, in my opinion, for US dollar is that dollar index, and it failed. And when you fail at a multi-year level like that, anything's possible. Could it shake it off and go back to the up? Possibly. Anything's possible, but I don't see it. I think that's important. I think that's a key change. So I like US dollar on the downside. The only other one that's kind of, has been a little bit more compelling, I would say. If we go to the Canadian dollar pairs, it continues to work. Look, it's going up versus virtually everything else. And I would just give it the benefit of the doubt that way. If you're looking at things that have established trends, we just spent a good while consolidating here for a number of days, and now we've broken out and are kind of retesting that. I just want to give the CAD the benefit of the doubt. If you want to get a little bit more on the aggressive side, Japanese yen. Look, we've talked about this one, that it kind of had its, let's go back and do a review. Here was its big exhaustion. There was the break and kind of the retest, kind of like when you're looking at Bitcoin and all of those. See how we pierced the low, and then that was a profit taker, and away we've been since then. Look, I like the Japanese yen to the upside as well. Maybe, I think it's a strong argument that it's the best currency to trade on the upside right now, technically, and on a momentum basis as well. So, the more I think about it, the more I like the yen as a trade. Again, as a trade, not so much. I don't know if this one will go for a few weeks, but for now, in the short term, absolutely. Okay. So I like the yen here for more upside. I like the CAD still on the upside. You could argue the Swiss franc had a big reversal. I don't know that I trust that, but it did have a big reversal day today. We're still on the daily chart. You can see it's trying to really rebound. It's coming into a lot of overhead supply and whatnot. I'd prefer the yen. I'd prefer the CAD still on the upside. So let's look at a few pairs now. Yeah, I think the yen. At some point the yen's probably going to fall over again. But I've really said, kind of the yen had its time to really get demolished and hammered. And now it's just kind of in that recovery phase where everyone's left it for dead and they forget about it and they don't trust it on the upside. That's where the yen is at. Nobody trusts this rally, which makes it a good rally. The fact that it's trending higher and nobody trusts it means, well, what? That means it's better chance that it goes up, because think about things that rally even when they shouldn't be. wouldn't be, couldn't be rallying, and yet they are, right? That gives you some confidence because now all of a sudden the people that are betting against it have to cover their shorts. That adds buying pressure and so on. So let's go look at a few pairs here. Let's say we wanted to trade the US dollar to the downside. Do we have anything that's a little bit more actionable right now? So this is dollar yen. And granted, we're still on the daily. You can see it kind of rolling over. It's been trending lower, well, kind of sideways, but a little bit lower slope the past couple of weeks. I think we get a little deeper dive here. So let's come into a shorter time frame like the 4-hour. And what do you see? Well, maybe we've got a little pattern here. Maybe you get a bounce in the short term that you can short into. So the next little bear rally, imagine you get a couple of candles going this way. I would look to short it, on that little bounce because I think we plunge down below it. That's a 4-hour time frame, but again, dollar yen on the short side, great. I like that. What about the 1-hour chart? Well, you can see the level that was broken, right? So let's drag a little line in there. And it correlates with what we just talked about. Get a little bit of a bounce, and that's really where I would like to short this thing. 128.70, 128.80 even, somewhere in that zone is kind of where I would like to short this, and it works on the daily chart, it works on the 4-hour chart, it works on the 1-hour chart. The only issue is going to be, well, what if we don't get a bounce? That might happen. This thing might just keep going, right? But if it bounces, that looks like a very compelling risk to reward. What if we went the US dollar against the CAD? Again, here I'm talking about shorting US dollar against the CAD. So let's back up a little bit. 4-hour chart. Okay, we've been kind of in there's kind of the break higher in the US dollar that failed, and now we've plunged back in. I think you can use this as a little bit of an instructive type of pattern because kind of the price pattern is what we would call a head and shoulder type of dynamic. It's basically, there's nothing magical about a head and shoulder pattern. It's just basically, a price pattern that's recognizable. But what's the concept? What's the idea? Well, the whole concept is basically that you went from one trend to another. In other words, the way a head and shoulder work is that you have been trending higher and then you kind of make this shoulder. And then as you go up the next time, you make a higher high, but then it plunges a little further. And then the next bounce is a lower high and you get the reversal. And what does it look like? Well, it kind of looks like this guy sitting here with his shoulders pointed out, and this would be called the neckline and so forth. All a price pattern is just something to help you recognize what's happening. And that's kind of how I see it is, look, we've gone from US dollar was great, US dollar's fantastic, US dollar's wonderful. Uh-oh, US dollar's starting to struggle. Expect a lower high, expect a lower low, and that's the trading opportunity. So, I like those pairings. That makes a lot of sense to me in terms of ideas. Pound USD. Okay, let's take a look. Was requested. So pound USD. Now, if you have the same thesis I have, which is dollar short, you're talking about buying this pair. That'll get you long British pound versus. So let's take a look at it. First, we go daily. It's bounced and now it's kind of bouncing, selling off. Do I think it should work its way higher? Yeah, probably more because the dollar's weak than the pounds get strong, right? I don't know that I love pound for buying, but I think it'll work anyway just because I expect US dollar to underperform everything else. If I come into the 4-hour, again, you're in a little bit of a pullback. You'd have to wait. But assuming it forms the same type of patterns we're talking about, this is kind of the dip that's looked at to be a buying opportunity. So, I don't hate it as a concept because I think the dollar is going to bail you out, even if the pound is maybe not the best. The 1 hour, you can see the pound's just not quite as strong as some of those other things, but you might get bailed out because I suspect over the next 2, 3 weeks, the US dollar should be one of the weaker currencies out there. That would be my expectation. I think it would surprise a lot of people that the US dollar is going to be so weak the next couple of weeks. I think it would surprise people that the stock market's rallying in the midst of a lot of bad news and inflation and worries and I think that's already what started to transpire, by the way. We've already seen the false break higher in the US dollar and it's back below resistance. We've already seen the S&P bottom out and now it's trying to build a little bit of a base and a bottom. It's already happening. So this isn't something where we're kind of predicting into thin air. No, it's already starting to happen. The question is, will it have follow through? I'm betting it does. That would be my thought. Kiwi. So Euro Kiwi. Okay, that's an interesting pairing. Let's take a look at it. So Euro Kiwi, I always like to start out and work my way forward. So Euro versus the Kiwi. Well, Kiwi's been, as far as the commodity currencies, pretty disappointing. But you can see Euro's trending higher and it's in a recent bull pullback. So sure, it can go higher from here. 4 hour, kind of in that little pullback we just looked at. 1 hour, kind of in a consolidation. I don't know that there's anything that I can really add to contribute. I think whatever your thesis is, you're going to have to kind of play it out and see if it's, following your patterns and whatnot. I don't feel like I can really add anything of substance here. I don't have a strong opinion on the euro. I don't have a strong opinion on the Kiwi. And I don't see anything on the charts that makes me slam the table and go, wow, look at this or look at that. So probably not the answer you wanted and the help that you wanted. But look, that's the reality. I just don't think that I can really add much to whatever you've got going on your thesis there. Euro USD. So some euro pairs requested. Again, I'm going to say that I think US dollar weakens, so I think euro strengthens in comparison to that. Now, there is something interesting happening in euro USD, and what is it? Well, the price. The price is interesting. Why? Because we're approaching parity. Now, parity, what does that mean? Well, 1-to-1, right? One of this for one of that. Typically, it has taken, $1.15 to get €1 or $1.10 USD to get €1. But what's happening? Well, what's been happening for the past few years, actually, is a lot of US dollar strength, which means what? It means that this pair is headed and has been headed towards parity. Once it hits 1.00, the figure as they call it, a big number, once we hit one the figure, well, now $1 will get you €1, and that has not been the case. So that's a big attraction. That's kind of a tractor beam of sorts. That's a little bit of a, there will be a push-pull, but that pull for that thing to come to parity will be very strong. Do I think it'll get there? Yes. Do I think it'll get there near term? Absolutely not. If you look at that US dollar index, remember what's been our thesis. We hit our massive high. We came off for years. We retested it, came off for years. And now we're back for the third time and we pierced and kind of the false breakout. Now we should fall for a few weeks. But then I do think, big picture, it's up and out from here. So this is the picture that I would draw. And we're right here in the process. We had the kind of the false move that sucked everyone in. Now we're right here, plunging back below. It should get pretty ugly for a while for US dollar. And then in the months ahead, we can work our way back. So this pairing should go this way for a while and then come right back, you know, later this year, first part of next year, what have you. We'll hit parity in all likelihood, but my guess is that's a 2023 story, that we're not going to get there soon. That would be my thesis, but something to pay attention to. Look, whole round numbers, these things become psychological and they can be impactful to markets, and you can certainly see things kind of have that gravitational pull towards those numbers. So good stuff. So back to our schedule and to kind of tie a ribbon on things. For the rest of this week, we had our midweek. We'll have our trading room update over the weekend. Next Tuesday, we are trading the RBNZ statement together. That's, in about 6 days or so. We'll be trading that. And then, of course, we'll be back for our midweek 1 week from today. US dollar had its big finish. I've had that in our slides for some time. Hey, watch for this. Watch for it to pierce that and reverse. That was a trade that you can already be in. And that's a trade that I think is a gift that should keep on giving. So I like US dollar shorts for the foreseeable future. Have a great rest of your day. Have a great week. And we will see you back next week. Same time, same place. Goodbye, everyone.